Health insurance is a way to help cover medical expenses. It can protect you from high costs. It is important because medical care can be very expensive. Without insurance, you might have to pay large bills out of pocket. Health insurance helps you access medical care when you need it. It can cover doctor visits, hospital stays, surgeries, and more. It also helps you get preventive care, like vaccines and screenings. This can keep you healthier in the long run. Many people get health insurance through their jobs. Others buy it on their own or get it through government programs. No matter how you get it, having health insurance gives you peace of mind. It means you are prepared for unexpected health issues. Understanding health insurance can be confusing. This guide will break down the basics for you. We will explain what health insurance is, different types of plans, and key terms. By the end, you will know how to choose the right plan for you. Health insurance is like a contract between you and the insurance company. You pay a fee, called a premium, every month. In return, the insurance company helps pay for your medical expenses. This agreement protects you from paying the full cost of medical bills. When you have health insurance, you usually pay part of the cost. The insurance company pays the rest. This can include visits to the doctor, emergency room, or hospital. It can also cover prescription medications and other treatments. The type of medical expenses covered depends on your plan. Some plans cover more services than others. It is important to read your plan details carefully. This will help you know what is covered and what is not. Having health insurance is important because it helps you manage healthcare costs. Without it, you might face high medical bills and financial stress. With insurance, you can get the care you need without worrying about the cost. There are different types of health insurance plans. Each type works differently. The main types are HMO, PPO, EPO, and POS. Understanding these can help you choose the best plan for you. HMO stands for Health Maintenance Organization. With an HMO, you must use doctors and hospitals in the plan's network. You need a primary care doctor who gives you referrals to see specialists. HMOs often have lower premiums. PPO stands for Preferred Provider Organization. PPOs offer more flexibility. You can see any doctor without a referral. However, using doctors in the network costs less. PPOs usually have higher premiums than HMOs. EPO stands for Exclusive Provider Organization. EPOs are similar to PPOs but more restrictive. You must use network providers except in emergencies. They usually have lower premiums than PPOs. POS stands for Point of Service. POS plans combine HMO and PPO features. You need a primary care doctor for referrals, but you can see out-of-network doctors at a higher cost. POS plans offer moderate flexibility. A premium is the amount you pay for health insurance every month. It is like a subscription fee. You pay this fee to keep your insurance active. Premiums vary based on the type of plan and coverage you choose. Premiums are usually paid monthly. Some employers help pay part of the premium for their employees. In this case, the employee pays the rest. If you buy insurance on your own, you pay the full premium yourself. The amount you pay in premiums does not change based on how much medical care you use. Even if you do not go to the doctor, you still pay the premium. This helps spread the cost of care among all insured people. Choosing a plan with a lower premium can save you money each month, but it might come with higher out-of-pocket costs. It is important to balance premium costs with other expenses like deductibles and copays. Section 5. The Role of Deductibles. A deductible is the amount you pay for healthcare services before your insurance starts to pay. Think of it as a threshold. Once you reach it, your insurance kicks in. Deductibles can vary widely between plans. For example, if your deductible is $1,000, you must pay $1,000 for care before the insurance company starts covering costs. After meeting the deductible, you may still pay a portion through copays or coinsurance. Deductibles reset every year. This means you start over each year, paying your deductible before the insurance covers costs. Some plans have separate deductibles for different services, like prescription drugs and medical care. Choosing a plan with a higher deductible can lower your premium, but it means you pay more out of pocket before insurance helps. A lower deductible plan may have higher premiums, but provides more immediate coverage. Section 6. What are copays? A copay or copayment is a fixed amount you pay for a particular service. For example, you might pay $20 for a doctor's visit. The insurance company pays the rest. Copays are usually required at the time of service. Copays can vary based on the type of service. Doctor visits, specialist visits, and emergency room visits often have different copays. Prescription drugs also have copays, which can vary by medication type. Some services, like preventive care, may not have a copay. These services are often covered fully by the insurance plan. This encourages people to get regular checkups and screenings without worrying about extra costs. Copays are part of your out-of-pocket costs. They are separate from the deductible and coinsurance. Understanding your plan's copays helps you budget for medical expenses throughout the year. Section 7. Coinsurance and out-of-pocket maximum. Coinsurance is the percentage of costs you pay after meeting your deductible. If your plan has 20% coinsurance, you pay 20% of the bill, and the insurance pays 80%. This continues until you reach your out-of-pocket maximum. The out-of-pocket maximum is the most you will pay in a year. After you reach this limit, the insurance company pays 100% of covered services. This protects you from very high medical costs. For example, if your out-of-pocket maximum is $5,000, once you pay $5,000 in deductibles, copays, and coinsurance, your insurance covers all additional costs. This limit helps you manage your expenses. Choosing a plan with a lower out-of-pocket maximum can provide better financial protection, but it might come with higher premiums. Balancing these costs helps you find the right plan for your needs. Section 8. Example of health insurance costs. Let's look at an example to see how premiums, deductibles, copays, and coinsurance work together. Assume you have a plan with a $200 monthly premium, $1,000 deductible, $20 copay for doctor visits, and 20% coinsurance. First, you pay $200 each month for your premium. If you visit the doctor, you pay a $20 copay. If you have a surgery that costs $5,000, you pay the first $1,000 deductible. After that, you pay 20% of the remaining $4,000, which is $800. So, for the surgery, you pay $1,800 total, $1,000 deductible plus $800 coinsurance. If your out-of-pocket maximum is $3,000, once you reach that limit, the insurance covers all costs for the rest of the year. This example shows how different costs work together. By understanding these costs, you can better anticipate your medical expenses. It helps you choose a plan that fits your budget and health needs. Section 9. Choosing the right health plan. Choosing the right health plan involves looking at several factors. First, think about your health needs. Do you need regular doctor visits or have ongoing prescriptions? Consider these when choosing a plan. Next, check the network. Make sure your preferred doctors and hospitals are included. This can save you money and ensure you get the care you need. Also, review the plan's coverage for services you might use. Compare the costs. Look at premiums, deductibles, copays, and out-of-pocket maximums. Balance these to find a plan that fits your budget. A plan with a higher premium might save you money on out-of-pocket costs. Finally, consider any additional benefits. Some plans offer extra services like dental, vision, or wellness programs. These can add value to your plan. By considering all these factors, you can choose a plan that best meets your needs. Section 10. Common myths about health insurance. There are many myths about health insurance. One common myth is that young, healthy people do not need insurance. This is false. Accidents and unexpected illnesses can happen to anyone. Insurance helps cover unexpected costs. Another myth is that all plans are the same. This is not true. Plans vary in coverage, costs, and networks. It is important to compare plans to find the best one for your needs. Do not assume one plan is just like another. Some people think they can wait until they are sick to get insurance. This is risky. Many plans have open enrollment periods. If you miss it, you might have to wait until the next year to get coverage. Finally, some believe health insurance is too expensive. While it can be costly, there are plans for different budgets. Subsidies and financial aid can also help lower costs. It is important to explore all options before deciding. Section 11. Summary and Annual Review. Health insurance is crucial for managing medical expenses and protecting your financial health. Understanding the basics, from premiums to out-of-pocket maximums, helps you make informed decisions. Knowing the different types of plans and costs involved can guide you in choosing the best plan for your needs. Review your health insurance plan annually. Your health needs may change, and so might the plans available to you. During open enrollment, take the time to compare options and ensure you have the coverage you need. Staying informed about your health insurance helps you get the most out of your coverage. It ensures you are prepared for any medical needs that arise. With the right plan, you can have peace of mind and focus on staying healthy.